Welcome to the Deep Dive. Today we're cutting right to it, tackling something fundamental for swing traders. It's that often painful truth.
Yeah.
Losing streaks. They're inevitable, really.
Absolutely unavoidable.
Yeah, so success isn't about somehow dodging them. It's more about mastering how you navigate through them.
That's the core of it.
And central to this, we think, are what we're calling the twin drawdowns.
Mm-hmm.
Think about it. You've got two kinds of capital you're working with. Your financial capital, obviously the money,
Right.
but also your mental capital, your focus, your discipline, your emotional state.
Critically important, that second one.
And here's the kicker. A hit to one, like a financial drawdown, it almost always drags the other one down too.
Oh, definitely. It creates this vicious cycle.
Which is why so many traders, frankly, fail.
It really resonates with what the trading legends talk about. You know, Ed Seykota, pioneer in systematic trading.
Sure. Know the name.
He had this great quote, "Losing a position is aggravating, whereas losing your nerve is devastating."
Devastating. That's a strong word.
It is, because he understood the real danger isn't just the dollars lost. It's the internal damage, the loss of confidence that spirals.
Makes sense.
So this deep dive, our goal is really to give you a professional's path for handling these turbulent times, protecting both your account and your head, basically.
That distinction is key, isn't it? Financial loss versus losing your nerve. So how exactly do these twin drawdowns, feed off each other?
Well, it's a classic feedback loop. Think of your trading account, your financial capital as the fuel in your car.
Okay.
And your mental capital. That's like the engine's condition, maybe the driver's skill and focus.
Got it.
So when that fuel tank gets low because you've had a string of losses, that's your financial drawdown, the engine starts to sputter.
Confidence drops.
Exactly. Your confidence wavers. Maybe your discipline slips a bit. That's the mental capital drawdown starting.
Right.
And this sputtering, this decay in mental capital makes you way more likely to react emotionally.
Like revenge trading.
Revenge trading, or maybe abandoning a perfectly good strategy too soon, or just freezing up, indecision.
Yeah, analysis paralysis.
And those poor decisions, they almost inevitably lead to more financial mistakes. Deeper drawdown, and the cycle tightens.
Wow. Okay, so it's really not just about the P&L on the screen. It's about the internal state driving those numbers.
Precisely.
So how do we break it? You mentioned this professional's path, rules, process, psychological tools. Let's unpack robust rules first. What's that mean beyond just setting a stop loss?
Right. Good question. Because it is more than just entry and exit. Robust rules cover things like position sizing. Crucial.
How much you risk per trade.
Exactly. And also things like daily or maybe weekly loss limits, hard stops.
Okay.
So for instance, you might decide beforehand, if I lose X% today, I stop trading. Period.
Like a circuit breaker.
Exactly. It acts as a circuit breaker. It stops the financial bleeding now, which in turn stops that impulsive reactive slide in your mental state.
Stops the panic setting in.
Right. These rules aren't about predicting the market. They're about strict, objective control over what you can control yourself.
That makes a lot of sense. Rules prevent the snowball effect. But rules alone? Probably not enough. How does a clear process fit in, especially when you're, in the thick of a losing streak?
Yeah. Rules need structure. A clear process provides that structure. It supports the rules and helps you detach a bit from the immediate win or loss.
How so?
It means having routines, like a pre-market checklist, a plan for managing the trade while you're in it, and, really important, a post-market review.
Reviewing every trade, even the losers, especially the losers.
Absolutely. Win or lose, review it objectively. What worked, what didn't, according to your plan, not your feelings at the time.
Okay, so it keeps you grounded in your strategy.
It builds disciplined habits, stops you from just winging it when you're stressed and losing feels personal.
Right, and that brings us to the third piece, psychological tools. These seem vital for protecting that mental capital, the nerve.
Right.
What are some practical things a trader can actually do?
Yeah, this directly tackles that losing your nerve problem Seykota mentioned. Yeah. Practical tools could be things like mindfulness techniques.
Mindfulness, like meditation.
Sort of. It's about observing your emotions, the fear, the frustration, without letting them dictate your actions, just noticing them.
Okay. Detachment.
Well, level of detachment, yes. Journaling is another big one.
Trading journal.
Not just trades, but your emotional state during those trades. Why did you take it? How did you feel? It helps you spot your personal triggers, your patterns.
Finding your own weaknesses.
Exactly. The goal is to cultivate that detachment from the short-term noise, the wins and losses, and focus like a laser on sticking to your rules and your process.
So reframing losses almost.
Precisely, reframe them. They're not personal failures, they're data points, they're feedback, learning opportunities to fine-tune your approach.
Okay. So bringing this all together for you listening.
Yeah.
Our mission here really was to help you understand and start to master these twin challenges. The financial drawdown, yes, but just as critical, that decay of mental capital.
And if you look at the big picture, there's a really profound unifying idea here.
Which is?
Protecting your money, your capital, and protecting your mind, your mental state. They're actually achieved through the exact same things.
The rules, the process.
Those robust rules, that clear process, and the right psychological tools, they protect both sides of the equation. It's about shifting your whole focus, really.
Shifting from what to what?
From trying to predict the unpredictable to embracing probability and just focusing intensely on disciplined execution. Process over prediction.
Process over prediction. I like that. Okay, as you think about all this, here's a final thought for you to maybe mull over. Your ultimate edge isn't really found in what you can predict out there in the market. It's found in what you can control right here, inside yourself.